At the opening of the US session, the dollar resumed its bullish run. As a result, commodity prices extended weakness. By the way, oil prices gained in value as well. It seemed that a correction was possible both in the commodity markets and in the foreign exchange market. Later, however, oil quotes gave in to the general trend and began to tumble. Perhaps OPEC's new supply deal might have been able to change the situation. However, it is not yet clear when exactly the negotiations will resume. Until then, oil prices are expected to follow the general trend, which implies a stronger US dollar and a decline in commodity markets. At the same time, it can be seen that US weekly crude oil inventories remain in negative territory. This in turn suggests a possible correction and an erasure of losses incurred in the last 2 days. Over 2 trading days, Brent crude lost about 6.5%. Overall, this decline is not so significant. If the correction continues, the benchmark is likely to approach the 70 level. However, the main scenario still implies the price correction from the current values to the levels of $73.5 or $74 per barrel. US WTI crude is also in a correction phase. Moreover, if the downtrend continues, the quotes may move towards the range of $69, $68.5. However, the low level of crude oil stockpiles will prevent the price from falling too quickly. Therefore, the benchmark is likely to recover from $71.5 to $72.5 or $73 per barrel. According to the trading chart, the dollar-ruble pair continues its corrective movement from the 71.55 ruble mark. Notably, the US dollar pared its April-June losses by about 50%. This is a sign of a possible change in the midterm trend. In order to extend gains, the quotes need to consolidate above 76.5 rubles. The euro-ruble pair's dynamics are similar. The European currency recovered from its April-June downward cycle by about 30%. Of course, far from all losses have been erased. Nevertheless, a trend change in the market cannot be excluded. For now, the weakening of the Russian currency against the higher US dollar seems quite logical. However, the ruble suffered bigger losses than other currencies. This stems from purely internal factors. Firstly, the Russian central bank's foreign exchange reserves suddenly dwindled, most likely due to exchange rate revaluation. Secondly, inflation in Russia continues to speed up. According to the latest data, consumer prices in the country jumped 6.5%, following a 6% increase in the previous month. This in turn suggests an increase in the key interest rate by the Bank of Russia, despite the fact that the economy has just started to recover. In such a situation, interest rate hikes may not only result in a slowdown in economic growth, but provoke a further economic downturn. That's all for now. Thank you for watching and stay tuned.